saw the dollar coming under a bit of pressure yesterday afternoon ahead of that FOMC meeting today, trading above 140, and of course the rand back below R6.90 against the US dollar.
Good morning, Stephen. Yes, we did see the dollar weakening yesterday, and that had led to the rand gaining some ground yesterday. And the rand was strong on two factors, really. Like you said, the dollar weakened on expectations that later on today the Fed will announce the second round of quantitative easing. But then here in South Africa, we also saw vehicle sales coming out, and they look like the sales have been accelerating, and in terms of our GDP differential point of view, that also supports the rand strength.
Obviously, if we do have that quantitative easing coming through, that could lead to more capital inflows, and one would think a bit more rand strength going forward from here.
Yes, Stephen. I mean, when we look at what's going to happen today, the FOMC meeting, the market has already priced in that the Fed will do the second round of quantitative easing. But then it remains to be seen where, in terms of the timing and the scope of the quantitative easing. And the market seems to be pricing in between $100 and $500 billion of asset purchasing program, and depending on what the Fed will do today, it will also drive the rand. But then again, like I said, it's already priced in, and if the Fed does come out and give a less than expected asset purchase program, then we can see some of the dollar or the rand, actually the dollar bears coming in and locking in some profits, and that can expose the rand to some weakness.
We had some negative data out of China this morning. That's the non-manufacturing PMI, slightly worse than expected, falling to 60.5 from 61.7. Would this indicate to you that internal demand in China is starting to weaken a little bit? And of course, we know that the government has been taking steps to try and slow down that economy.
Stephen, that's really a point of debate, because 60.5, it's still quite a strong number out of China, and China economy has been growing very strongly. But like you say, we had China also raising interest rates, and that might have an effect in cooling down the non-manufacturing sector in China. However, like we did see yesterday, PMI in China was really stronger than expected on the manufacturing sector, which means that the manufacturing sector is growing much more stronger than the service sector.
Well, we've had some indications in the papers today that we could be given a ratings boost following the medium-term budget last week. So Standard & Poor's at least saying that it views that medium-term budget as quite positive. Do you think this could lead to more positive ratings for South Africa?
Stephen, that is also quite debatable, but then I do believe that when the medium-term budget policy was announced, we did see fiscal deficit being revised down, which is positive for South Africa, especially given that most of European countries are still running quite high fiscal deficit. So when you compare South Africa with most of emerging markets, fiscal position in South Africa looks quite favorable. And in terms of economic fundamentals, we did see the medium-term budget also revising up our GDP growth forecast, which also is positive for South Africa and also can bode well for the ratings for South Africa. So that is quite possible.